Citi Economic Surprises Index and how that may be telling us that maybe things aren't going to be so hunky-dory in the markets going forward.
That's right.
Did I get that right, Spencer?
Yeah, no,
explain that as enthusiastically and cogently to the people as you can. Oh, we got a chart there. There it is. There's the,
it's a really interesting index, and I'll tell you why. Because it's not measuring any kind of economic indicator. It's not measuring,
the economy.
It's not measuring the economy. It's not saying whether it's good or bad. What it's measuring is how wrong, and they're consistently wrong. If you look at this chart, I mean, it goes up and down like a yo-yo.
How wrong economists
How
are.
much economists move in herds and are wrong in herds. But not just that. It's that I think we, students of the markets have known that for a long time, right? I mean, that economists are sort of, but what it points out, it's a lot of its turning points is when economists have gotten overboard and sort of, keep on extrapolating the bad news or the good news
when they're
and
really
are about
wrong,
to get it wrong.
When they're
right?
really wrong, it tends to mark a turning point.
That's right, yeah. And not always, but it often does.
Right, so last summer, they were all out, recession. Odds of recession, 30%, 40% a lot, 50, 60% chance of recession. You had the guy, ECRI, what's his name?
Lakshman.
He came out, definitely recession. He's still saying definite recession.
That's right, yeah.
And when everybody says there's a recession, odds are probably not recession.
Look, I mean, when everyone comes out and says, the sky's falling, head for the hills, then by that point, the market, and what was the market? Where was the market in August? Where was the market? September 30th was when ECRI made that call. When did the market bottom and head up 26%? Starting the next session, October 3rd. I mean, I don't want to pile on him because he's had a rough few months, but he was a perfect contrarian indicator. And this is an interesting. It hasn't always been a perfect contrarian indicator because this index has been around for I think since 2003. But basically the average is 0 of the index, and it goes up as high as it's been almost 100. It's been as low as minus 118, and it just measures how wrong they are. And it doesn't zigzag around 100. It goes up and down to the extremes, every several months.
Right. So does this prove that economists are mostly wrong, or that they're most wrong when they tend to run in a pack?
It proves they run in packs.
Right.
It does prove that. It proves that they, like us, like humans, because we have these hunter-gatherer brains, right? I mean, sort of, 99% of our existence was, chasing mastodons, and 1% has been looking at stock charts, and that's all well documented, right? I mean, we tend to extrapolate the recent past, whether it's good or bad, and we're a little slow to change our minds. And professional pride does that too, right?
A lot of that, when it comes to the economists, certainly with the Wall Street economists, is because they're basically paid to, they get a bonus when they're not that far out of the consensus. When you're far out of the consensus and you'll either be a hero or a goat. More often than not, you think you'll be a goat, and so you tend to stay in the crowd. Is that a fair assessment?
Yeah, I mean, I think, if you look at the last recession, right? How many Wall Street economists, I mean, I'm talking about, if you look at the 16 or 17 biggest Wall Street firms, how many predicted the recession, not just before it happened, but the month that we entered the recession? How many of them were predicting a recession? 0. And the same for the one before that, 0. So, I mean, they're not very good at calling a turning point. They're good at, describing things. They're good at, extrapolating what's happened recently, but they're not good at.
I'll tell you what they're good at. They're good at visiting with institutional investors and sharing conventional wisdom, which is then parried back to them from the institutional investors as conventional wisdom, so that they all kind of, make sure at the end of the year they all get paid. Is that too cynical?
I couldn't put it better myself.
Is that too cynical, Spencer?
No, I think, they have some, you can't say that they're all cut from the same cloth, but you're not too far off the mark by what you said.
Spencer Jakab, ahead of the tape. Do you think ECRI is going to be proven right? Are we heading back into a recession?
You know what? I think that we may be headed for more of a slowdown than some people expect. Recessions, there have been 11 recessions since the Second World War. They don't happen that often.